Hi there, and welcome to this week's Mortgage Market Update. I'm Joe Trovato. Today I want to talk to you about mortgage interest rates, where we are and where we're headed. So we all know back in September, the Federal Reserve cut interest rates by a half a point. And what we've seen in the mortgage market is that mortgage rates have done nothing but go up ever since. So why is that? It's a little bit counterintuitive. So it's important to understand a couple things. Number one, that the mortgage interest rates are driven by the bond market and specifically the bond traders. That's the amount of which bond traders are buying and selling the bonds. Now, bond traders look at two things very closely. Number one, fiscal policy and spending, what the Fed is doing, how much the government's spending, and more importantly, the economic data. These are the indexes that come out weekly and sometimes daily that help investors predict where the market's going to go. So if we go back to May of 2024, this year, you could see that the interest rates were kind of high. We were at like 7 3/4 or 7.5, almost 8%. But at that point, we were looking at inflation coming down, and we were looking at the Fed. We were all anticipating a Fed cut. So we saw this dramatic drop in interest rates from the mid to high sevens to the low sixes. So about 1.5 or 1.75 in some cases, lower mortgage interest rates, which is a huge benefit. Now, when the Fed cut in September, right after they cut, the bond traders had nothing else to rely on except the economic data. Things like consumer price index, producer price index, housing starts, durable goods, jobs reports, unemployment, so on and so forth. So what those indexes have been showing the bond traders is that from an inflation standpoint, there's still a little bit of concern about inflation. So we're not out of the woods yet. So that's why we saw this spike in interest rates and the mortgages from September when the Fed cut through today of about 3/4 of a point, which puts us at about the mid to high sixes, 6 3/4, 6.8. That's where we are today. But the good news is that interest rates are still about a point lower than they were just back in May. So that's creating a great opportunity still for buyers to buy in this market, or people to refinance or get a home equity line, whatever it may be. So the question is, well, where are we going? Well, what's going to predict what happens to mortgage rates is really as the economic data starts to unfold as we move forward. But what we can see is that they're probably going to hang. We're not going to see a spike more about what they are, but we're not going to see a drop either. So now is a great time to buy because I think the mortgage rates are a little bit stable for the next 2 or 3 months. I'm Joe Trovato. Thanks for watching.